Welcome to another edition of the JMM Expert Insight series. This time we're speaking to Sam Spring, President and CEO of Kincora Copper. Sam, thanks for being with us.
Thank you, Jane, for the opportunity.
And for viewers who might not be familiar with the Kincora Copper story, can you give us a little bit of an overview on the company?
Yeah, Kincora is a copper gold explorer, pre-discovery portfolio of large, predominantly copper porphyry targets in New South Wales, one legacy project in Mongolia. We've got one Cobar style project in New South Wales as well. But at this stage, being an explorer, the key thing is the technical team. We've got a very strong bunch of industry-leading geologists that have found big copper gold systems before, whether that's Cadia in New South Wales or Reko Diq in Pakistan. So we're at that pointy end of looking to make new discoveries with a big portfolio.
And Sam, just further to that then, Kincora describes itself as a project generator with a unique approach to the copper gold exploration space. So can you explain how that model works and what makes it so effective?
Yeah, and it's a term that's not so familiar on the ASX. It's more of a Canadian funded led model, which is really looking to get asset level partners in and minimise dilution to equity level investors by, instead of raising significant money at the listed company level, look to get these technical partners come in, do their due diligence, de-risk these projects by that technical nuance as well as their funding. And that means it's a more scalable business model. With exploration, the more good targets you drill, the better the chances of success. It's all about shots on goal. And this business model provides a really attractive runway where we've got 7 projects. We wouldn't be able to fund those all ourselves, or if we did, it'd be significantly dilutive to our shareholders. By having this business model, it gives our shareholders the best chance of us making a discovery and them actually financially benefiting from that by not having that dilution at the listed company level.
And look, you've touched on that and you've had a lot of success, in fact. So you've executed 6 project level deals, which have unlocked over $110 million in potential funding. What do these partnerships mean for your shareholders?
Yeah, and each deal is different to the specific project and what does that partner bring, whether it's technology. We've done deals with Fleet Space, Earth AI, that are new generation tech explorers that are well funded. We've done 2 earn-in deals with AngloGold Ashanti, the world's 4th biggest gold miner. So it's getting the right partner for the right project. But in summary, it's all about meters in the ground. There's potentially 110 million of funding that's unlocked that isn't dilution at the listed company level. The opposite, actually, in the form of the deals we've got with AngloGold Ashanti, we're actually receiving a management fee. So we receive 10% of expenditure. That's an income source that actually gives us a non-dilutive form of financing. So I guess what this business model achieves is hopefully scale, and that's where we're about $5.5 million of that potential 110 of expenditure over 11,000 metres of partner-funded drilling. I should sort of note, Jane, that this change in funding model is only something that we saw drilling resume in the 4th quarter last year. It took about 12, 18 months to change that funding model. So we're just ramping that up at the moment.
And Sam, again, to just touch on that, but just to reiterate, you've also announced a second major earning agreement with AngloGold Ashanti. So what does that relationship mean for your flagship projects?
Yeah, we've consolidated 5 licenses, a 100-kilometre north-south strike in the northern part of the Macquarie Arc. What we're looking for is a new province here, multiple discovery opportunity. Where the operator, Anglo, has the ability to spend $100 million before our shareholders have to fund their portion of continuing advancing that project portfolio. So it's a big scale project that we wouldn't be able to do without having the right partner there. And again, it's getting the right partner for each project. We're the operator of that, receiving a management fee up until the end of March. We had about $3.5 million of expenditure that had taken place. So that's about $350,000 worth of income to the company. We've just finished 20 holes at our Ningen project. We're going down to our second project, Nevertire. We've got a pipeline of drilling that we expect to see a rig operational until Christmas this year. So it's one that we'll see continual news flow coming through.
And now just looking towards the Macquarie Arc, which is obviously located in New South Wales, why is this region so compelling for copper gold exploration?
It's Australia's leading porphyry belt. There's been 16 billion recent M&A for the producing mines. There's been over 385 million of earning deals with majors partnering with juniors. There's 160 million ounce gold equivalent resource inventory. And what we're seeing is the majors, whether it's gold, copper, diversified majors, increasingly looking at growth, and they're coming back to good jurisdictions where you've got world-class assets. And what we're trying to do is position ourselves as effectively a partner of choice within this region. If the majors want to outsource their exploration, increasingly you're seeing these win-win partnerships, and these are the sort of jurisdictions that the majors are increasingly coming to.
Haven't there? I mean, that $16 billion number is pretty impressive. And there are a lot of majors that are looking at the junior space, so it's a great space to be in. Let's move on to the management side of things now. You're receiving management fees and your drilling activity is ramping up. So, can you explain to investors what that means?
Yeah, and off the back of our second deal we announced with AngloGold Ashanti only in April this year, we put out for the first time guidance that we want to have over 10 million of partner funded drilling that we're managing and we're getting a management fee for. The reason for that number is so that we can achieve a self-funding business model where effectively $1 million worth of management fee incomes covers our corporate costs, and then investors effectively have very significant leverage to asset level partnerships and the drilling that does. But without that continual funding that you see every 6, 12, 18 months, what we've just only announced this week is that we're undertaking a private placement led by some North American investors to also fund some drilling at 100% basis at our Condobolin project. So coupled with management fees, topping up our treasury with this raising, it should provide investors with a really well-funded vehicle with significant drilling taking place.
Yes, well done on that capital raise. Do you maybe want to explain to the audience who is coming in to corner a deal like that?
Yeah, and this business model again is more prevalent in North America, and we're dual listed, ASX, TSXV. We're very pleased to have got Rick Rule and Jeff Phillips, two really leading North American investors. The deal that we've announced is pretty unique in terms of a 12-month hold on the stock, an accelerator on the warrant, share consolidation, really tightening up the capital structure and the shareholder register to really provide us the best opportunity to re-rate really hard, get a multiple return from investors that reflects, I guess, the deals that we've done to date, what we think the catalysts ahead of us are, and some of the relative peer groups that we have of other explorers that are active in our immediate region that have comparable assets, comparable deals. So this funding, I think, is pretty good endorsement from a well-credentialed group of what our strategy is, and provides us the ability to continue executing.
Sam, you've also got exposure in Mongolian Southern Gobi. Can you share how that fits into Kincora's broader strategy?
Yeah, and that's one of the 6 deals that we've done to date, Jane. We historically were exploring in Mongolia. We pivoted, focused in 2020, 2021. We're the largest shareholder of Orbminco. The real carrot to that relationship is having an asset level exposure at Bronze Fox, which is a really big copper porphyry project. The appeal of that Southern Gobi region where it's located is pretty clear, with Rio Tinto's Oyu Tolgoi project on track to be the 4th biggest copper mine in the world by 2030. Xanadu recently receiving $160 million cash offer. There's another private project about 50 kilometres from our project that's a $1 billion construction project that's being built at the moment. So the geology is excellent, and what that deal provides is shareholders exposure to that near-term drilling that Orbminco is looking to do. They're just in the field doing geophysics at the moment, without having to worry about us being diluted and funding that ourselves.
Finally, what upcoming milestones should shareholders be looking out for?
It's a pretty simple story, Jane. It's further deals. We've got our 3 flagship big porphyry projects in New South Wales that we're looking for partners for. We're in pretty advanced conversations. It's more drilling. We've got drilling that's being taken place across 3 different projects at the moment, obviously with Condobolin just about to be ramping up with the funding that we've announced just this week. It's more management fees, looking to get to that self-funded business model. And ultimately, all those elements of more prospects, more projects being drilled will hopefully ultimately lead to more discoveries. And that's the key value driver for any explorer. So it's a pretty exciting period for the company.
Lots of news flow to come, Sam. Thanks so much for your time today.
Fantastic. Thank you, Jane.